Alright, so let's go ahead and start with an overview of the Forex market. So what is the Forex market? The FX market, or the foreign exchange market, is the world's largest traded investment or trading market in the entire world. Every day there are trillions of dollars that get traded hands on the FX markets. So who trades all this volume? Well, mostly it's the banks. For the most part, the Forex market is traded so heavily by banks who are converting currencies back and forth. Just like when you go into the airport and you see that little kiosk where they are exchanging one currency for another, banks are trading the FX market, converting and trading and placing investments throughout the FX markets. But that's not all of who is involved in the FX market. There's also people, presumably like you and I, that are retail investors or retail traders looking to get in on the action. So why do so many traders around the world prefer Forex? Well, like I mentioned, the Forex market is extremely high volume traded every day. There's also the ability to leverage your positions a lot in Forex. What does leverage mean? Essentially, it means, to keep it simple, if you have a small amount of money, you can leverage it up with a broker and trade it as if it were more money. Essentially, your broker is going to lend you money to trade with, and you can trade like you have more money. So with a small amount of money, you can actually trade it like a lot bigger account. So that's essentially why. The FX market is just a massive auction house, essentially. So let's talk about the auctioneer involved. Let's start with the basics of Forex trading. What is a pip? A pip is often referred to in Forex trading, and it is a small measurement of change in a currency pair, usually 1/100%. When is the Forex market open? One of the appealing things about the Forex market is that it is available to be traded 24 hours a day, 5 days out of the week. Depending on where you are in the world, this can include Saturdays and it can also include Sundays, but for the most part, Monday through Friday is when the Forex market is traded. When or what is a currency pair? A currency pair is two currencies quoted against one another. So for example, let's take a look at the US dollar crossed against the Japanese yen. What this means is that we are quoting the US dollar against the Japanese yen, and we will have a corresponding chart representing the two currencies quoted against each other. What are the major currency pairs? It is important to know which currency pairs are the major ones, because major currency pairs are ones that are traded the most heavily and will provide the most liquidity for traders to enter and exit trades. Liquidity means that you can easily get in and out of a trade because there are so many other people in the world trading, taking the other side of your trade. The majors are the pound against the dollar against the yen, and the euro versus the dollar. What you'll notice is that the US dollar is involved in all three of the major currency pairs, and that is because the US dollar is a very profound and strong currency pair across the world. All right, so let's talk about the auctioneer that I just spoke about. The auctioneer in Forex is the broker. So what is a broker? Well, just like in real life, if you were to try and sell your house, you would have, presumably, unless you sold it yourself, a broker that's going to help you sell that house. Now, if you sell that house, the broker takes a small percentage of what is made on the house sale. In the same way, the Forex market has brokers, which are kind of like a middleman to enter and exit positions on the FX market. So if you want to buy the euro, then your broker is going to offer you the platform and offer you access to take that position. Now, how are they going to make their money in this? What's in it for them? They're going to make money every time you take a trade based on two main things: spreads and commissions. First, we'll talk about spreads. Spreads are going to be the idea that, okay, if you want to buy the euro, then the FX broker that you use may add something like, let's say, 2 pips to the current price. It's trading at one price, but the broker's actually going to offer it to you at 2 pips higher than that, and they are going to make that 2 pip spread on your trade. So that's spread. The other one is commissions. Now with every FX broker, it's a little bit different. Some offer commissions, some offer no commissions, some are cheap, some are expensive, but for the most part, Forex is pretty competitive in their brokerages for commissions and spreads, which is very nice as a retail trader. So commissions are going to be your cost per trade. So let's say that if you want to take a position on the euro, you're going to get charged some percentage of your position size, something like that. In the stock market, it's often around like $5 per trade in the American stock market. But in the currencies market, it's often a lot cheaper, which is very nice. So what is the difference between a regulated and unregulated broker? So one thing that's important to note is that in each country, there are going to be companies that are used to approve or disapprove brokers. So in the States, of course, there is the FDIC, which is going to essentially make a judgment call about certain financial companies and essentially pass or fail them. Now, if a company or a broker is regulated, it's for the most part a positive sign that they are probably, for the most part, pretty trustworthy. Now, if they are unregulated, it does not necessarily mean that they are a bad broker, but it is cause for concern for more research to be done. You need to be very careful if you're going to use an unregulated broker. My personal recommendation is definitely to use a regulated broker in your country that is going to be a lot safer for you. So for me, I use Oanda in the United States, where I'm from, and that is definitely a great broker, and they are regulated, and I know that I'm very safe with my broker.
Okay, so now that we've talked about what a broker is and what the best way to look for a proper broker is, we're going to talk about the Metatrader 4 trading platform. Many brokers, if not almost all brokers that I know of, offer Metatrader 4 as the trading platform. The picture you can see on the right is a picture taken off of a Metatrader platform downloaded on my computer. So Metatrader is going to be your terminal for placing and opening and closing trades on the currency market. As you can see Oanda in the navigator panel on the left there. Now Oanda is my broker, like I mentioned previously, and you're going to see that this entire terminal was offered to me by Oanda. So to get access, what you're going to want to do is, for most brokers, it should be very clear and easy to follow on how to get Metatrader on their website. So for me, Oanda, I go to the website, and it's very clear that once I log in, you can see an easy download Metatrader 4 platform, and then you'll have their version of Metatrader available to you to trade. So now we're going to go into the chart, and I'm actually going to show you the platform and give you a dynamic walkthrough of just the overview of Metatrader.
All right, so we've loaded up our Metatrader 4 platform here, and what you'll notice first is that we have these currency pairs already populated on the screen. So as you can see, we have the Euro US dollar here on the 1 hour chart, and if we maximize the screen, you'll see the price showing up on the chart here. So what we can do is, if we want to shift the chart over, you click this button here, shift, and you'll see we have some space on the right, which is nicer for us to look at the chart with. At least that's my opinion. You can toggle it on and off, up to you. So from there, what we can do is we can go back to all of our tiles by clicking this button here. So next, what you're going to want to do is you're going to look over here on the Market Watch. Now this is important because this is going to be where we can grab any currency pair available to us to trade by our broker. So for me, I'm using Oanda, and as you'll see, I've got all of these following currency pairs that I can trade. So let's say we're currently looking at the Euro USD on this pair, but let's say we want to look at the Australian New Zealand dollar currency pair. What I can do is I can grab this
and drag it onto the chart, and you'll see it populates there. Now we're looking at the Australian New Zealand dollar on the 1 hour chart, and you can see it here. So from there we can change the chart. Instead of, these are currently, this is a bar chart, we can change it to a candlestick chart or a line chart, whatever you prefer. So from there, let's say we're looking at the Market Watch panel here, and we don't see a pair that we want to trade. Well, if you right click and you click symbols, this is going to show you all of the available pairs that you can trade, or instruments that you can trade provided by your broker. So we have Oanda, and these are going to be all of the different currency pairs available to trade for my account. So let's say we don't see something that we want to trade here. Let's say we want to trade the Australian dollar versus the Canadian dollar. Well, you can see right here we've got the Australian dollar, Canadian dollar. If we double click, it's going to highlight it here, and it just populated it over here. So now we can close out of that, grab this and drag it onto the chart here, and there we have it. Now we have the Australian dollar, Canadian dollar available to us. So that's just a little bit of organizational tools. This is how you access the different symbols available to you. The next thing we're going to look at is the terminal down here. So the terminal is going to allow us to keep track of the different trades that we currently have open, or the account history right here. You can see we have not taken any trades on this account, and we can also check alerts. That's another important thing. We can set an alert to see, or have Metatrader 4 make a noise or send us a text message if price gets to a certain point that we're interested in. You can also see that we've got, like I said, the trade panel is going to show you the live trades that you have open currently. The account history is going to show you past trades, and then the alerts panel or tab is going to allow you to keep track of whatever alerts you'd like to create. For the most part, the rest of them I don't really use personally, but we can go into some of them. We have the news panel. You can take a look at just kind of world news that's going on. You can take a look at, for example, your mailbox. You can connect a email to Metatrader 4, and so on and so forth. You'll have to come and play around a little bit with this terminal just to see more about it. But if you want to hide any of these panels, what you can do is you can just click up here on the icon for it. So if we don't want the terminal to show up, we just click it. If we want it to come back, click it again, and there we go. We're back into the terminal. So the next one we're going to look at is the navigator panel, which is used to kind of keep track of bigger picture stuff about your account. So for example, we can keep track of your currently logged into accounts. If you want to open another account, you can click here. You can log into another trade account if you have one, so on and so forth. Also, we can take a look at our indicators. So what your indicators are going to do here is, these are tools. If you don't know what an indicator is just a tool to help you make a decision on a chart. So for example, we can drag whatever indicator we'd like to see onto the chart, and we're going to just use the default settings. You can toggle the settings if you'd like to upon putting them on the chart, but we're going to just click OK, and you'll see we can populate it with the CCI indicator. And so if we want to delete that, we can right click the chart, click indicator list. We can see the CCI, and we can delete it. And there, it's no longer there. So that is going to be where you can kind of play around with your indicators. Expert advisors are trading tools that you can use, kind of automated algorithms that will trade for you. There are plenty of these available online. I myself trade primarily with an expert advisor. But for the most part, we won't be worrying about that for this introduction. So also there we have scripts, is something similar to an expert advisor, basically just a programmable line of code essentially that's going to execute some function on the chart. For example, if you want the chart to make a noise at 12 p.m., you can program that. Whatever, it's a lot of endless opportunity there. So, but more into that maybe in a future course or a future lesson. So that is basically going to cover our Market Watch, our Navigator, and our Terminal, which are our main things we're going to look at. Another thing to point out, we can click a new order. Let's say we pulled up the Australian dollar CAD. If we want to open a new position on the Australian dollar CAD, we can go here to click new order, and we can do a market execution or an order, a pending order, and there's going to be more on that later in the course. So we're not going to worry too much about that now. So like I said, you can also change your time frame here, and you can take a look at the 1 hour, the 4 hour, the daily, all sorts of stuff. So that is just going to be kind of the big picture approach to your first glance at Metatrader. Hopefully that will help you get started, and we will be going more detail into this as the course goes on. So we've mentioned our example of buying the euro earlier in this course, but what does it actually mean to buy a currency pair? We mentioned the euro, but this is the euro US dollar. So what does that mean? If you have only the access to pairs of currencies rather than just buying the euro, what does that mean? Well, actually, buying the euro USD is not as simple as simply saying the euro is going up. Buying the euro against the US dollar is speculating that the euro will go up and the US dollar will go down. So if you take a buy position on this, you think that the market is going to go up in this currency pair. Essentially what this is saying, euro USD, you need X number of US dollars to get 1 euro. If you think about it that way, it's not too complicated. So if the price goes up, it means that you need more US dollars to get 1 euro. So hopefully that makes sense. But moving on, we're going to talk about the difference between buying and selling, or long and short. They are pretty much the same thing, but what you're going to be saying here is if you're buying, you speculate that the price will be going up. And if you're selling, obviously you think the price is going to go down. Same applies with long and short. It is the same concept. Long meaning you think it's going to go up, and short meaning you think it's going to go down. But when you're shorting or buying a currency pair, you are actually always speculating that one will go up and one will go down. So let's say we want to actually short the euro USD. What you're saying in this case is that you think the euro will go down and the dollar will go up relative to each other. So it really is kind of a proportion to each other. So the euro USD, or let's say the Australian dollar versus the Canadian dollar, those are currency pairs. That's speculating that one will go up and one will go down. Like I said, buying this pair is going to assume that the euro goes up and the dollar goes down. That is what you are speculating. So, like I mentioned as well, if price does move up, it means that the euro has appreciated against the dollar. Now there's multiple different pairs for each currency. So let's say we, instead of the euro USD, we looked at the euro Swiss franc. The ticker symbol is EURCHF, the euro Swiss franc. So in this case, if the price moved up on this chart, it means that the euro is appreciating relative to the Swiss franc. When we are ready to actually execute an order, we can open up our Metatrader 4 platform and go up here to this button, New Order. What you'll see here is that we have our symbol, in this case looking at the US dollar versus the Swiss franc, and we have our volume, which is going to be our lot size. We are going to have the opportunity to set a stop loss and a take profit, as well as choose if we would like to place a market or a pending order. Then we can sell or buy by market, and our position will be filled, and you'll be able to see it, like we mentioned earlier, in the trade section of the terminal. Placing a trade order. When trading the Forex market, there are a couple different ways that we can enter and exit a position. Some of the examples that we're going to show you now are a market order, a limit order, and a stop order. These are different methods that have certain applications for entering and exiting positions. Our first example of an order type for placing trades is a market order. Now, a market order is going to enter a position at the closest available price upon execution. So this is the fastest way to enter the market. For example, if we see a price that we like trading currently and we decide we would like to take a position, a market buy is going to enter us at the closest available price, and put us in a long position. Our second order type is a limit order. Now the best way to explain a limit order is actually through an example. A buy limit order is a pending order below the current price, and a sell limit order is a pending order above the current price. This implies that price is currently not trading at where we would like to enter. However, if price does go to that level, we are interested in taking a position. Notably, the price for a buy limit order is going to be below the current trading price, where we would like to enter the position. So in the illustration below, you can see that if price goes to your limit order, it will then get you filled. If price does not go there, you will not get filled. You might use a limit order if you think that at a certain point a currency is oversold or overbought. In the illustration below, you can see if price came down to our level, we were ready to purchase the currency pair in an effort to watch price then appreciate and go up, earning us a profit. Take profits and stop losses. What is a take profit? A take profit is going to essentially be your target for the trade once you are in it. So for example, if you take a buy position on the USD Canadian dollar pair and you place a target or a take profit 50 pips above the current price, from there, if the price gets to your take profit, you will automatically be closed out of your position for a profit. Now, on the other hand, what is a stop loss? Similarly, we can set a point on the chart where you determine that you were wrong or the trade didn't work out. This is the point that you're going to stop the loss, as the name implies, and close the position at a loss. Let's say in this case, if you are long on the US dollar versus the Canadian dollar currency pair, and you place your stop loss 25 pips below, if the price goes below your entry by 25 pips, you're going to automatically be closed out at a loss. Order type number 3, a stop order. A buy stop order is a pending order above the current price. And likewise, a sell stop order is a pending order below the current price. Now, if you remember, a limit order is actually the opposite of this. For a buy limit, it is a pending order below the current price, but for a buy stop, we are looking for a pending order above the current price. Now, this is important because if you try to place a buy stop order below the current price, you'll have some sort of error and won't be able to do it. So it's important to know which order to use in the right period of time that you're trying to trade, or the right price level that you're trying to trade. So in the illustration below, you can see that price first goes down, and let's say that if price breaks through a certain point, we think it's going to continue in the direction. So as price goes down, we say at a certain level, we think there is a critical point where if it falls through, it's going to break down and continue further. This would be a great point to use a sell stop order. In this lesson, you are going to learn how to modify an existing order. Also, you'll learn how to cancel an order that's already been placed as a pending order, as well as closing a position that is already open. Okay, so we're back on our Metatrader 4 platform, and I'm going to show you how to modify an existing order. So this is an order that's already filled, and we are long on the Euro US dollar. So if we want to modify this, let's say we want to add a stop loss to our trade. What you can do is you can simply drag from the order itself on the chart and pull down, and what you'll see on the left hand side here is that we have a stop loss in place now. The SL means stop loss, and what you'll see here, the TP is the take profit. So now our trade has a take profit and a stop loss set. So next, what we're going to look at is how to cancel a pending order. Well, first, let's generate a pending order. For example, we'll go to New Order, Pending Order, and let's say we want to set a buy limit, and we're going to put it some point lower than the current price. There, we have a buy limit a certain distance down from the current price level. So if we want to modify this one, we can double click and you'll see we can change the stop loss or take profit here. Let's say we just add some random take profit and stop loss just for demonstration. You can also change the price at which the pending order is sitting. This is, remember, a buy limit order because it is below the current price. And we can click modify. And there we go. Now you'll see it has a stop loss and take profit of its own. Now, if we want to cancel this pending order, we can simply come down to our terminal in the trade section and go all the way to the right and click the X box. You'll see it's off our chart and no longer going to enter us in a position if the price goes down to that point. And finally, if we want to close a position, we can either close it here with the X box as well, or we can double click the order itself and click close. And there you have it.